Strategy co-founder Michael Saylor posted the Bitcoin BTC 105 hours and 133-hour chart signaling an impending BTC purchase by the company, despite the ongoing conflict in the Middle East, which could rattle global financial markets when they open on Monday. The company's most recent Bitcoin buy occurred on June 9th, with a relatively small purchase of 1,045 BTC, valued at approximately $110 million, bringing Strategy's total holdings to 582,000 BTC. Data from Saylor Tracker shows that Strategy is up over 50% on its investment. This translates to over $20 billion in unrealized capital gains in fiat terms. Saylor's announcement of an imminent Bitcoin acquisition is another sign of investor confidence in BTC amid the Israel-Iran conflict and the looming uncertainty over global financial markets. Investors are watching to see how the financial system will react when markets open on Monday, following escalations by both countries over the weekend. Israel launched airstrikes against Tehran, Iran's capital city, at 22:50 UTC on Thursday. The price of Bitcoin slid by only 3% following news of the initial strike and has held firm around the $105,000 level since the conflict started. Bitcoin exchange traded funds, ETFs, recorded 5 days of consecutive inflows this week amid the ongoing uncertainty surrounding trade tariffs, the U.S. economy, and the growing geopolitical tensions in the Middle East. BTC ETFs experienced a net inflow of over $1.3 billion in capital this week, according to data from Farsight Investors. The Crypto Fear and Greed Index, a metric tracking overall market sentiment, is currently at 60, indicating greed among investors and a bullish sign for digital assets in the wake of mounting geopolitical tensions. Despite the current price resilience of Bitcoin and other cryptocurrencies, Coin Bureau founder and market analyst Nick Puckrin warned that Iran closing the Strait of Hormuz would negatively impact risk asset prices in the near term. The Strait of Hormuz is a narrow waterway that connects the Gulf of Oman to the Persian Gulf. This critical oil shipping route is responsible for the transport of approximately 20% of the world's oil supply. Energy is a necessary input at all levels of the economic production process, and a spike in energy prices will likely impact global financial markets as businesses and investors contend with the increased operational costs. Bitcoin holders leverage crypto-backed loans to buy real estate without selling a single sat while sidestepping capital gains taxes. The emerging trend is gaining momentum among early crypto adopters, entrepreneurs, and high net worth individuals who are Bitcoin wealthy but often don't meet the traditional criteria for real estate financing. Mauricio Di Bartolomeo, co-founder of Ledental Cointelegraph. Bitcoin-backed lending models allow borrowers to leverage their crypto without divesting. Since taking a loan doesn't typically count as a taxable event, clients can access liquidity while retaining upside exposure. Borrowing using your Bitcoin as collateral doesn't typically trigger capital gains taxes in most jurisdictions, because borrowing against an asset is typically not a taxable event. You are not selling your Bitcoin, Di Bartolomeo said. To secure a Bitcoin BTC of $105,147 loan, clients lock up BTC at a typical 50% loan-to-value LTV ratio and receive fiat or stablecoins. The average funding time for one lender is 9.6 hours, Di Bartolomeo said. These funds are then used either as a down payment or to cover the entire cost of a property. The model also offers some flexibility. Interest and fees accrue over the loan term with no mandatory monthly payments. Repayment can occur anytime without penalties, and loans can be renewed if the LTV remains under 60%. Borrowers also retain the right to withdraw excess collateral if Bitcoin appreciates during the loan term.